My name is Kino, and I'm the Managing Director and founder of Collateral Australia, empowering entrepreneurs and small business owners to navigate their tax and accounting needs. As part of this instruction video, I'll provide a brief overview of the Cashbook, best practices, and limitation. I will also include timestamps in the video for ease of reference. Xero, QuickBooks, MyOb, you would have heard these accounting softwares before. While I'm a big advocate for using these accounting software, particularly Xero, time and time again, I see clients avoiding using these due to the monthly costs involved and features that they don't often use. This results in a disconnect between their business and finances. A study conducted by ASIC states that more than 60% of small businesses in Australia fail within the first 3 years, and poor financial management is one of the leading causes. So why a Cashbook? We've created a Cashbook to provide a low-cost, one-off solution for startups and entrepreneurs. We ensure the process is as seamless and automated as possible to make the experience enjoyable in understanding your finances. The Cashbook also includes an income statement which shows how your business performs on a month-to-month basis. When using the Cashbook, we recommend implementing best practices. The Cashbook supplements your record-keeping requirements together with your tax invoices to substantiate any income and expense. We recommend making a habit of taking photos or saving your tax invoices in a secured cloud-based storage system like Google Drive, OneDrive, or Dropbox, ready for your accountant during tax time. We recommend using a dedicated bank account to make the most of the Cashbook automation. It will also be easier to track, and given most major banks offer zero monthly fee business bank accounts, it's no-brainer. Reviewing your finances requires training your mental muscle. Make it a habit to do the Cashbook weekly or fortnightly. Please don't leave it until the end of the financial year. It will just become a guilty conscience. If you do find value in using the Cashbook, we recommend starting a new Cashbook every financial year. If your business continues to grow, now that you're equipped with seeing your financials, we highly recommend talking to your qualified accountant to transition you to a cloud-based accounting software before this Cashbook can't handle any more transactions. As with any product, there are limitations. For this non-GST Cashbook, the transaction per month is limited to 140 transactions. We cap the transactions in the view that if you exceed this transaction limit, then we recommend using a cloud-based accounting software as your business continues to grow. This Cashbook is a general tool for record keeping and should supplement the tax invoice you save as mentioned in the previous slide. While we took every step to make sure the Cashbook is as seamless and automated, it still requires your hand to copy your bank statement and categorize the transaction. Lastly, this Cashbook does not constitute professional advice or tax advice. While we are here to assist you, use it at your own risk. This Cashbook was created and is owned by Collateral Australia. It must not be distributed, copied, or shared without our permission. Without further ado, I'll walk you through how to use the Cashbook. There are 4 key tabs I'd like you to focus on. In front of the screen is the monthly tab. This is where you complete your bank reconciliation, keeping in mind that throughout the Cashbook, any titles or cells highlighted in yellow will require your manual input. Moving on to the input sheet. This is where you'll start your process. The input sheet includes instructions on how to copy and paste your bank statement for ease of use. Next, the quarterly business activity statement or BAS. Once you completed your bank reconciliation correctly, the disclosures needed to load your BAS will automatically populate. Lastly, the income statement, which will also automatically populate once the bank reconciliation is done correctly. This tab provides a month-to-month overview and comparison of how your business is tracking. So, how do you use this Cashbook? Starting with the Input Sheet tab. As mentioned, cells or titles in yellow require your manual input. First, input the financial year ended. This is because the Cashbook drives the monthly reconciliation tabs, quarterly BAS, and income statement based on the financial year end that you've inputted. Next, download your bank account statement in Excel or CSV format, ensuring that the date, description, debit and credit columns are included. If you have a dedicated business bank account, include the opening balance of the account, either from when your business activity started or from the beginning of the financial year. In this case, I've included an opening bank balance of $1,000. Once you've downloaded your bank statement, copy-paste the data into the input sheet, ensuring you retain the original format. How do you do that? If you right-click on the cell and you go Paste Special and Values Only, it will retain the format. Now, you'll need to check that the bank balance matches your actual bank statement. And if it doesn't, you'll need to include any missing transactions manually. Don't worry if the dates are out of order in this input sheet. Each monthly tab will automatically sort them to ensure that the dates are correct. We recommend making a habit of updating your Cashbook regularly. This not only keeps you accountable, but also ensures you're staying on top of your business. When entering new transactions, just go to the last completed transaction and paste the new data below. Moving on to the monthly tabs and using July as an example. Now you'll notice that the date, description, debit and credit columns are automatically populated based on the data you entered in the input sheet. There are 3 fields you must complete for each transaction: business use, GST indicator, and category. Business use requires you to input the percentage of business use for the transaction. For personal transactions like cash withdrawals for your own personal use, you can input 0%. Otherwise, you can input between 1 to 100%. GST indicator. Now this requires you to review the tax invoice related to that transactions to determine if GST applies. If GST applies, you can input Y for yes, and if it doesn't, you can put N for no. What will happen is in column H, it will automatically calculate the GST for you based on your manual input. Now lastly, category. Categorize the transaction appropriately. There are currently 5 income categories and 64 expense categories, but you're not expected to use all of them. We recommend being consistent when you're doing your bank reconciliations. For example, if a supplier relates to office expenses and you often use that said supplier, always use office expenses. If everything is entered correctly, the reconciliation check under column K will display reconciled in green, otherwise it will remain blank. If I go through the first line item regarding Square sales, I say that the business use is 100%. And I can see that the invoice has GST in it as I am registered for GST. As you can see, column H will automatically populate it to be the 10% of that sale. And then I input it to be a category of sales. Now you can see that column K has now told me that it's now reconciled. For the remainder of the transactions, you can see that it remains to be blank. So you have to make sure that you input business use, GST indicator, and category to reconcile them. Moving on to the quarterly BAS. Now, once you've completed a quarterly back reconciliation correctly, the quarterly GST disclosures will automatically populate, ready for lodgement via MyGov or the business portal. If your activity statement includes a T7 pay-as-you-go income tax installment, you can either input option 1, which automatically populates the BAS, or if you're using option 2, you'll just need to input the ATO assigned percentage. What the Cashbook does will automatically calculate your pay-as-you-go installment based revenue to make it seamless as possible. Now lastly, moving on to the income statement, we recommended reviewing your income statement monthly to see how your business is performing, along with a month-to-month comparison. The Cashbook also calculates year-to-date totals, making it easier for your accountant come tax time. And that's it. We hope you found value in watching this video and using our Cashbook. We welcome any feedback, big or small, as we aim to continuously improve the Cashbook for future entrepreneurs and small business owners. If you found this tool beneficial, we'd be grateful if you could share it with fellow entrepreneurs and small business owners. Thank you for watching.